everyone, I am Divyanshu Gupta from Headstart Network Foundation, and on behalf of Headstart, I would like to take the opportunity to welcome you all to outreach session of Venture Challenge 5.0 hosted by AIC, Shiv Nadar University, NCR, Delhi. This session is mainly focused on leveraging opportunities and challenges in funding and investment. For further moderation of the session, I would like to invite Sheeba Khan, who is CEO of AIC Shiv Nadar and have a vast experience of around 15 years in field of investment and research. Over to you, Sheeba.
Thank you, Divyanshu. I think it's a pleasure to be here, and it's a wonderful session. I could see so many people joining in, a good count, and an amazing panel. A very warm welcome to the whole panel, Akhilesh, Visa, Tushar. So glad to see you here, and I hope this session brings on some very interesting facts for all the startups to take this up. So let me just quickly introduce why are we here, and let me introduce our new cohort application or the announcement which we have recently made. So this is the 5th cohort of Atal Incubation Center at Shiv Nadar University, who is supported and you can say supported and sponsored by Atal Innovation Mission, Niti Aayog, Government of India, also by Startup India Seed Fund. So whole of this discussion will always be like any startup, you can say the medicine, of course, is the mentoring and everything, but yeah, we do need investment, which comes in the form of whenever they need a cure for survival, it's definitely there. Maybe you can say a little bit upon how they are surviving. So we know that this whole application process will intake a lot of interesting startups. We already have detailed out this process on Startup India. If you are interested, you can apply there. The offerings, of course, involve a lot of things apart from the investment. We have a huge offerings in the tech space where we have great infrastructure at the campus to avail. Also, the program is free right now. We do take stakes after a while once the startup has shown some signs of progress. So over to my guest, I would like to have some basic intro, and since I just go by the line, I see the faces here. So first I'll introduce Akhilesh. Akhilesh, a very warm welcome to you for this session.
Thank you so much.
Yeah, hi. So Akhilesh works with he's working with early stage startups in various roles at Pi Ventures as EVP. Prior to that, he has worked as investment banking analyst at Goldman Sachs, executing deals with worth over $3 billion. He graduated engineering from PES University prior to completing his master's in finance from Russell Institute of Technology, New York. Akhilesh also is one among the volunteers at Headstart. Glad to see you, Akhilesh, here, where he plays a vital role in developing the Indian startup ecosystem.
Thank you so much, Sheeba, for that intro. And hi, Tushar and Visa. I think I've known both of you for a while, so quite excited to do this with you.
So, Akhilesh, would you like to add some points, and then we can move to some questions? Some interesting thing would you like to address to the audience?
No, I think we can just dive into the questions. I think we again, probably 7 minutes over 5. I'm pretty sure everyone wants to get into the meat of the discussion, so I'll be happy to jump in.
Sure. So the first question, of course, is investors today have a high focus on bringing diverse and global experiences across deep tech, including AI, Web3 and blockchain, and many more technologies. As part of the fund, 15 of companies funded by your team, where is it, like if they want to talk about the ticket size, what is it? And what is your philosophy as an investor before going ahead for any deal with any of the startups? That's a quick, straight questions for the startups here.
So I think it's a good question to kickstart this session, right? And we can really set the foundation of what a typical VC would look like, especially from a tech perspective, for a tech startup, let's say. So look, right, from an investment evaluation perspective, a lot of, if not all VCs, they follow pretty much the same format or a checklist. if you must, right? But some key things that an investor, would look at is probably the relevance of the founders to a particular solution, which is now popularly being referred to as founder market fit. You try to understand the founding team's background and their ability to tackle the problem that they've set out to solve for, right? But that's not it. What also starts becoming important is the size of the market that you're trying to tackle, right? The investor also wants to know, what is the magnitude of the return that they can expect from an exit in your company. So, for example, if you're looking at $1 billion in market size, let's say, and even if the startup only captures 10% of this market with, let's say, $100 million in revenue, an early stage investor will still have a stellar exit at the end of the fund cycle, right? But one critical insight here, that I want to offer is, usually investors like to estimate market size based on a bottoms up approach, right? So, as a founder, it's sometimes very useful to think from an investor's perspective and then do the exercise themselves and have a clear understanding of the true market size for whatever they're trying to crack. So there are many things that an investor would look at while deciding, let's say, on an investment, apart from these two things, such as try to understand what the moat is or defensibility is of the product, what stage the product development is in, and if it fits their thesis, is there any traction yet? What are customers saying about them? But, you mentioned philosophy, right? So when you think of it from a philosophy perspective, all of this changes and differs for every investor. Of course, the broad themes that everyone looks for is the same, but the way that every investor analyzes each piece is different, right? The way an investor would give weightage to each of these different aspects would change. For example, some people may put a bit more weightage on the traction or on customer testimonials and their reviews, while some may even invest at an MVP or a PowerPoint stage, right? So, evaluation of investment opportunities up until making the investment truly differs not only from investor to investor, but also with respect to the sector that they're analyzing. So, to conclude, in my mind, evaluation and philosophy are two separate things. When it comes to an investor making a decision, because at times you might have very positive conversations with investors, but then you probably they come back to you with a disappointing answer that you weren't expecting. Right. In these cases, what I've realized that it's neither philosophy nor evaluation that it comes down to. It's basically a matter of their gut and how they feel about the space.
All right, I think that was amazing, and I believe that there is a lot of gut and heuristic feeling when anybody is doing investment, even choosing what they want to invest or where they want to invest. So these are amazing tips what Akhilesh given to us. So I move on to, so Akhilesh, we are not ending here. We'll get back to you again.
Sure,
so we
sure.
have another interesting investor here, Lisa. Hi, Lisa. Sorry, Lisa. Amazing meeting you again. After a couple of months, we met at the campus. It was amazing to have you here at the campus. So Lisa is also one of the core investor in Deep Tech because she has been here and discussed a lot of things. Very interesting conversation we had like a few months back, and I'm so glad to have her here again on the same panel. She's quite related to the field what Atal Incubation Center at Shiv Nadar University is looking for. So, and I hope that many of the startups here also deal with the same field, like they are from technology background, and Visa will help them a lot with her experience with Ankur Capital, where she was part of the investment team or investing in deep tech early stage startups. And now she's part of the Speciale investment as member of investment team. So Visa, would you like to address something, or we can directly go to the questions?
I mean, nothing. I mean, like Akhilesh said, right? Let's jump into the boards directly.
I'll just shoot the question right away. Considering your idea of interest in deep tech, what's the vision and thesis of investing around these domains, and what are some core domains where your team thinks that these are the ones which I should look forward to?
I mean, thank you for that. Thank you, first of all, for inviting all three of us together. I mean, Akhilesh and I, we have known each other for a while. Hi, Tushar. This is the first time I think we are meeting. Well, I mean, as a fund, I'll just give a brief about Speciale again. We are an early stage fund, right? Basically, the idea is frontier technologies and enterprise B2B SaaS. These are the two major focus areas, right? So when it comes to kind of talking about the vision and the thesis, before I kind of delve into the specific sectors, again, that be broad enough. But the vision and the thesis of the fund is to kind of invest in breakthrough technologies, and I think Akhilesh would also kind of very much relate to that, right? Because the idea is to look at these spaces which can actually which are coming up, which are using science to kind of make an impact, right? It's beyond SaaS, it's beyond code. It's actually bringing things, innovations from lab to market, basically, right? And how it kind of be turned into a business model in order to kind of impact the larger landscape, right? In terms of thesis areas, I think as a fund, we are invested heavily in space tech, right? We have invested in EV, right? In my previous organization, I have invested in a battery which kind of got released. Off-grid is something that we invested in Anchor Capital. Here also at Speciale, the idea is to look at renewable batteries, battery chemistries, trying to find alternative to lithium batteries, right? The other piece that we are kind of looking forward to also is in terms of quantum computing. Again, these are very early stage synthetic bio, again, right? These are very early technologies, right? Not in terms of science, the science is developing, but in terms of forming products and bringing products to market, we are still seeing very early tractions, but these are interesting markets to kind of explore. Because if you're talking about investing in deep tech, it's important to have that vision as to where the technology can move and how, because markets when it comes to synthetic bio, when it comes to synthetic organs, right? They are very early stage, but the market is huge, because if you can just see the number of surgeries that are happening, the number of transplants that are happening, the market is a huge market. That's where I think more it comes down to how further the technology has developed, right? And based on that, the thesis is kind of built to say that, hey, these are batteries is one, EV infrastructure is one, space communication is one, quantum is one, climate is another very important piece, right? How do you kind of, but again, you have to pick and choose. Bio is one, right? You'll have to pick and choose within these, right? To see that which have advanced further, where as an investor, you can kind of come in, right? And where as an investor also, you'll have to sit back and kind of keep an eye out as to say that how the other pieces of technology is moving for other buckets within the same sector, right? So these are very opportunistic as well as very visionary bets. And Akhilesh, you can kind of add to those points, because the idea is to kind of be a little bit bold, have more risk, but also be aware of the fact that is the ecosystem developed enough to kind of take that technology to a bigger aspect, right? So that's based on that, I evaluate any technology or any startup that I want to kind of look into the deep tech space. I hope that answers the question.
Yeah. So that was wonderful, Visa. I think we gel a lot with this new cohort, what we have announced recently. So we added 4 more areas where we'll definitely look for startups to support. Space tech, one of them, and then power batteries, and then we are also looking into life sciences, where we need to be patient and patient with these startups. Also, we need some investors like you guys who need to be patient after investment with these startups, because they will take their own gestation time to grow and develop. So with this, I moved to Tushar. Tushar and I have been connecting on and off, being the part of the Headstart team. But so glad to see you, Tushar, here. So Tushar has been a serial entrepreneur, has been very active in the investment circle. He's has experience in diverse domains, including e-commerce, products, D2C, growth marketing, SaaS, and the list is long. So he's been a very active member in the Angel Syndicate network of early stage startups, which the Headstart has created. Currently, he's building Set My Cart, a SaaS-based e-commerce platform enabling D2C brands and manufacturers to sell omni-channel and increase sales. So good to see you, Tushar. So I think you will also prefer to have the questions directly to you. So my question is, how was 2021 for Headstart Investor Circle? Did HIC make any direct investment, and what sort of startups Headstart Investor Circle has looked up to, and what was the investor scenario. So people are also curious to know how this COVID, semi-COVID or whatever you say scenario went for Headstart.
Sure. Thank you so much, Sheeba, and hi, Akhilesh, Visa. So glad to be on this platform with both of you. So a very good question, Sheeba. In fact, for Headstart and Headstart Investor Circle, it has been a wonderful year. So it has been like a dream come true for us at Headstart. So there's a very recent initiative started just a while back. So we are able to invest in almost 5 portfolio companies in the last 1 year, and I'm happy to tell you that almost all of them are doing well. And it has really been a very I would say impressive journey for us. We just started with as you all already know, that Headstart has been very active in the early stage ecosystem. We have been there for almost 15 years. So we work with so many VCs and angel networks, connecting them with early stage startups. We have been doing pitch events and all these activities in the past as well. But there have been hundreds of angel investors who have come across, who wanted to invest in startups, but there was no connect between both these communities. So we see that a lot of startups, they want to they want funds, as you rightly started the session with, that is a very big challenge for the startups. But then reaching out to a VC stage takes a little while for them to show some understanding, some traction, and that is wherein startup tries to have some angels or such early investors on their cap table, whose support they can take at a very early prototype stage or maybe MVP stage, and they can show some quick traction. So wherein you would want to close your deal very fast and show some quick traction so that you can reach out to a VC, maybe a pre-series A or such sort of funding. So that is wherein we always wanted to form such a sort of syndicate wherein we can quickly help the founders in raising capital and show a very early traction. So that is what we always dreamt of, and last 1 year has been awesome. As I said, we evaluated I would say more than 1,000 startups, and we were able to invest in a few of them. Still, this year as well, we have set certain targets for us. And beauty is that as Headstart always works with so many incubators across the country. So, supporting incubators and their incubated startup, we want to make that journey very easy, so that we can have a direct access. Plus, we also work with a lot of early stage funds. So that way is also, we want to bridge that connection gap, which has been existed in the market earlier.
I think that's amazing to hear, and we look forward for a lot of more support from Headstart Investment Circle in coming months. So this year, we hope that this will be another big year for Headstart Investment Circle. So that's amazing. So Akhilesh, over to you again. We do have a lot of things on the chat box. Maybe we'll go to the questions later. So there's another question for you, Akhilesh. What do you like when an early stage startup come to investment funds, or when you have these ventures coming to you? One thing which you must suggest the startups must work on, being a deep tech startup, they need to work and come back to you as an advice. What do you say to them? Like, what are those tips for the deep tech startups to get a investment deal closed?
That's a really good question, and I think would love to hear Tushar's and Visa's thoughts on it as well at some point in this in this panel. But okay, let's start from the beginning, right? So if you're talking from a perspective of let's say an investor giving advice to, let's say, a deep tech founder, right? So I think one of the primary things here that I'd like to point out is that it takes, as you and Visa both very rightly kind of hinted at, is that it does take a very long time to kind of really incubate and to kind of get something out of your deep tech startup, right? It takes a very, very long time to build an MVP, to iterate, to create a product while really trying to find a market for it as well. And and this is especially true for startups in space tech and life sciences, biotech, something that both of you touched upon. I think another data point that is quite fresh is that if you see from the 90 or so unicorns that are there in India, only one of them has now become a unicorn. And this was announced, I think, earlier today, right? And it was founded in 2008. So it's taken them almost 15 years to get to this stage where they're a unicorn. And then we know a couple of other companies that are either in consumer tech or e-commerce that have started up in the last 5 years and have also done their IPO, right? So there's a marked difference between how long it actually takes to kind of get a deep tech startup really off and running, especially if it's in some form of physical innovation, right? But there has been a lot of money going into deep tech over the past few months, and at least I think over the last year or so, right? Even generalist funds are now actually focusing a small part of their capital to deep tech, right? So it's extremely positive tailwind that this sector is facing at the moment. But in terms of tips, some things that I feel deep tech startups should really try to focus on is figure out very early on how technology and commercialization can really converge, and preferably have a global business use case attached to your technology. How do you go about doing this early in your journey? Well, you don't really need a full-on ready product to engage with customers, right? You can build a deep tech solution, approach clients, enterprises, SMEs, or whatever your target market is, and then pitch them from a POC or a pilot perspective, right? And all the more better if you're getting paid for your POC or pilot. And this becomes even more important if you're doing something in hardware deep tech, like I mentioned earlier, right? Space tech, robotics, material science, life sciences, nanotech, etc. So when you approach potential customers, for a POC, you learn from these experiences. You really understand what customers want as part of their solution, and go with what you learn from the majority. Don't try to build for every single customer. You'll spread yourself way too thin building for every single customer. It will block your ability to hyperscale, especially if it's a SaaS company early on. So figure out what your ICP is and build for that. Build for your early majority and start engaging with more and more potential customers during the process of your iteration as well, right? And that will help you really make your product experience better. You don't really need to wait till your product is 100% ready. Start engaging with folks within your target market and who fit your ICP fairly early on. Try to get these connects via your network. Iterate on the product continuously. Outreach cold to people who you think might need your product. Get their feedback, and keep approaching new clients. So again, the first few pitches to investors may not really work out, but they will be learning experiences. Iterate on these experiences and try to partner with an investor who sees the long-term vision of your startup, right? And even if someone doesn't respond, let's say early on in your journey, keep sending them updates on a regular basis. You never know which investor will get interested in the sector that you're working in at what point of time, right? And then kind of Visa brought up this point earlier on about specific frontier technologies and the need to balance the risk between timing and the investments. But I also kind of want to mention here that these businesses and sectors are all cyclical, right? Something that wasn't interesting to an investor, let's say a year ago, probably is something that is the hottest deal on the table right now, right? So that's something that I'm sure all of us have seen. I'm sure Tushar, we saw, everyone's come across this situation, and we kind of scrambled at the last moment to figure out, hey, look, how do we really get into this space again, right? So summarize, to kind of summarize. If you're building a startup in deep tech, you have to be really mentally prepared. In most cases, it will take a lot of time. And think about how you will make a strong business use case right from the get-go out of the tech, preferably from a global perspective. And of course, have patience and look for patient capital.
I think that was amazing. And that adds to the value of how if you are able to build that trust. And I think do a small deed, like do your small case or a pilot and go back and show the results and get some more people on your journey added as networks. So that's a very good tip what Akhilesh has given. Visa, if you would like to add some more point onto this, that will be very helpful for people here.
I mean, I completely agree to what Akhilesh said. I'll just kind of go a little bit micro here, right? So there are these, one is in deep tech, again, you'll have to divide it in two aspects, right? One is the science aspect and one is the engineering aspect, right? Now, often what happens is that when you're, Akhilesh, jump in, right? So when you're talking about robotics and all of that, right? The mathematics is there, but it's more of an engineering game, right? So it's a nut and a bolt game. So even if, keep doing your pilots, and when you get those feedback, you can go back to your whiteboard and kind of get back to it in the next 6 months or so. When it comes to life science and the other aspects, right, it is more of a science unless you're adding algorithms and basically computation. That's a different problem, and it's a different way of looking at it. But if you're looking at all proteins, synthetic bio, right, CRISPR, all of that, right, basically that's a science problem, right? Now, often what happens is that if you have to go back to your whiteboard, it takes a longer time to kind of come back, right? So have those. So when you're kind of approaching it, be in love with the problem and not the solution. Because if you're in love with the solution, then you'll lose focus of the problem. And that's when, you will not be able to kind of address it faster, right? And hence, when you lose sight of this problem and focus on the solution, sometimes it's not what your customer needs immediately, right? And again, like Akhilesh said, that then how do you kind of, then investors at the end of the day, we also have investors that we have to, who will be knocking at our door saying that, where is my money, right? So make sure that you have those pieces sorted. So being in a deep tech investor, deep tech founder, I think it's really kind of a different ball game altogether, rather than the usual consumer or SaaS kind of a market. So be very cognizant about that. Be very cognizant about what you're kind of doing, and be in love with the problem. That's when you will be able to kind of take feedback also in a much better way, and will be able to kind of get back, onto the ground again, to the play field, right? So I hope that that's all I had to kind of say, because there is something called engineering problem, and there is something called the science problem, and needs to be separated out of it. Yeah, that's it.
I think, Tushar, you could add something from your experience being yourself an entrepreneur. What exactly the view from the other side of the table?
Sure, definitely. I mean, I'm lucky to be having experience from both sides of the table, like as an entrepreneur myself, and now from the investor side as well. So one thing which I have observed, and I mean, to add to what Akhilesh and Visa said, I would like to bring out is, we as entrepreneurs, what happens is that we try to speak from an investor's language. Like even on the chat, sometime I read a question saying, what do investors look for, right? So investors look for what exactly you are doing. So what happens is, usually we try to speak their language, so that we are able to convince them, or we try to change something on our deck which fits their investment criteria or their this thing. Look, like for example, if I'm not having AI as a core in my startup, why should I write edtech with AI? Because they would then think it from that angle. So do not change your plans, investor to investor. Whatever you are at heart, as Visa already said, but express your feeling for your startup rather than what investor is looking for, and you try to match his or her feeling. So be real. Even if you are not at a particular stage, even if you do not have answer to a few questions, that is absolutely fine, because you are at a very early stage. You might not have experimented a lot to get the right answers to it. Take feedback, be open to feedback, but be real. Be real about whatever problem you are discussing. Even if you trust, if you have a passion for the thing what you're doing, that is the most important thing which would excite an investor. That okay, even if they may not invest, they might be able to connect you to someone if they believe that you are doing something good. May not fit if it is not fitting their thesis. So being real and passionate, whatever you're passionate about, to express that core feeling is the most important thing.
All right, I think that was amazing. 3 of people, like 2 of them from the deep tech, 1 of them from the entrepreneurs experience and journey. That's amazing. I think a lot of people must have taken some notes and thinks that what next they need to do. So I'll just move to the quick question for Visa now. How Speciale Invest can help a SaaS startup, as your major portfolio seems to be in the same domain, and there have been so many startup investment recently being done. So how do you shortlist that investment in a SaaS? So if you can just put your thoughts onto that, and your business majorly being into mainly being into agri, edtech, and many more similar domains?
So I think the way, let me put it this way, right? SaaS, you divide it in two ways. Again, one is the B2C model and one is the enterprise SaaS, right? Now, the way enterprise SaaS works is that you're kind of trying to find problems for enterprises or where the white spaces are, where, there could be an automation or there could be a tool that will help and kind of define the workflow in a much better way so that, basically at the end of the day, the work has to get done, right? And any tool or any product that is able to help out in that space kind of, punches in. The way we go about in terms of investing in SaaS is one part of it is that you see there are ways, if I can say it right, SaaS is easily replicable, right? Someone kind of builds it out and it's easily replicable. What really kind of defines one SaaS in the same domain as the other, kind of differentiates a bit, is the customer insight and understanding the customer problem in a very deeper way, and being able to create the workflow with such clarity that one is able to, that kind of really simplifies it for your customer. So somebody who understands customers in a very deep way is somebody who will kind of really, take that journey in a much better way than someone, in the same space. So I think unlike frontier tech, where IP is like extremely high and it's hard to kind of re-engineer or replicate, SaaS is easily replicable. Where it kind of comes in is getting your insights very important. Have your pain points sorted. Again, it comes back to the same thing that all three of us, hinted in different ways, right? Have the problem in your hand, have the problem in front of you with so much of clarity that you know how you want to address it, right? So at the end of the day, most of the entrepreneurs that I have spoken to in SaaS also, they have been customers at one point of time that they realize that this current scenario is not able to address it, and that's how they kind of come up with. So most of the operators where they have kind of worked somewhere, they realize that, hey, as a customer, this is something that I was not able to find it, and that's the gap that they have been able to translate it right into a product, right, which has been loved by customers, and that's how they scale, that's how they succeed. So that's what we kind of look for, right? Of course, there is a DeFi, developer tools, no code, low code, all of those fancy jazzy words are there, but at the end of the day, it comes down to customer needs and meeting customer needs with great products, right? One is the code and one is the design, right? It comes down to what Steve Jobs did, right? To say that, am I creating a product that is so easily usable that it has to be like very intuitive, it has to be easy, and it has to meet your needs, and it's able to simplify your workload, right? If that you're able to do it, customers will onboard, right? And they will be able to pay. Of course, in India, the SaaS market, it's a very price conscious market. So most of the SaaS companies that we invest, it's obviously a global market that we're looking for, because Indian SaaS, the margins are absolutely from nowhere to hardly, like minuscule, right? And you cannot really do much about it, right? But from a global landscape, definitely SaaS is scalable as well, right? Because if you're able to get the problem sorted in the right way, you scale. The other way that we also go about in terms of investing in SaaS is also kind of look for those companies that are also very much complementing to our existing SaaS portfolio already, right? So again, there is that. So someone who's coming to us, if we see that there is an immediate potential, one of our other SaaS portfolio companies can be a customer, right? There's a plug and play module as well that we kind of look towards, right? So these are the 2 pointers that we look to say that, is it kind of complementing? It's not necessarily it's going to be complementing. The first point is most important, right? That do you have your custom problem statement sorted, and how easy the workflow is. The second piece, of course, I mean, to an extent, we also say that, is it complementing? Because it kind of suits, right? Because this new startup will be able to get an immediate customer easily, right? And kind of test more and do more reiterations and all of that. And the other person is also able to see that, hey, these new products are working out for the white spaces that I'm facing in my workflow or not, right? So these are the 2 things that we kind of go about looking for when we are investing in SaaS. Yeah, so. that's that from Speciale's point of view.
I think that's very, very interesting to hear. So Tushar, over to you. If you can highlight what kind of startups is Headstart investment network, investment circle is especially looking right now. Couple like some highlight on that would help the startups here to understand.
Sure, Shiva. So, the idea for Investor Circle has been very interesting. So, we want to partner with the startups as the first investor, first earliest person to support the startup, handhold them at a very initial stage. So there's no sector restriction as such with us, because we Headstart being such a wide community, we have access to mentors, investors, which can help, even community corporate partners, which can help the startups with a lot of go-to-market strategies as well. We have some specialist, even the angel network member who are there are specialists in themselves in terms of handholding the startup. So when at early stage, because startups may not have all the talent pool available, and founder may not have all the skill sets, right? So every person is limited with a particular domain skills, right? But then at early stage, we need all sort of expertise, mentorship, support in terms of go to market, wherein Headstart network or investor circle is a very, very what I would say essential for the startups coming on their cap table and supporting them in their growth. So we would look for very passionate founders, as I said earlier as well, because it's a very early stage in which we would be helping the startups. It can be at a very early traction stage with some MVP and some prospects, but mainly it would be on what they want to do and how much passionate the team is. Are they capable enough to take it ahead and make it a big company? So that is what we would be looking for broadly. There's no restriction as such in terms of sectors, but we would definitely want to explore startups who can dream of making themselves big, have a very differentiated offering, which would be easy for them to, because as of now we see almost all domains are, I mean, every domain we say, people say it is crowded, EdTech it is crowded, D2C it is crowded, SaaS it is crowded. So how do you differentiate yourself? So if you have some plans around those lines, I mean, we would be happy to explore the opportunities and partner with them at very early stage. So that is what we look for.
I think that's very important for the startups here to know what exactly is the support Headstart Circle is doing. So likewise, if Akhilesh, would you like to highlight the sectors you are focusing? Also, what is that, apart from monetary support, what exactly are the investors bringing on the table? If you can highlight that aspect also, because definitely startups look like money is of course a part, but there's a lot of hand-holding support they need to scale up, and what exactly would they can look forward from investors like you, Visa, and Tushar, so everyone can have their views on this. Yeah.
Cool. So I think, let me take a go at your first question. What are the different sectors that I'm looking at, from a perspective of deep tech investments? So, again, within deep tech, there are multiple things, as, Visa rightly pointed out, right? So, a very, very broad overview, sort of a categorization would be, let's say, hardware and, software, just to kind of take it to the bare bones, right? And again, hardware would include, let's say, some sort of physical innovation, let's say robotics or in nanotech, material science, biotech, space tech, right? So that would be one way to go about it. And then, that'd be software, again, kind of going down the AI ML route, where you really look at, SaaS, B2B or B2C, as Visa rightly said earlier, right? And these are all the kinds of things that we are looking at the moment. And specifically in terms of innovations or that converge from a perspective of both hardware and software, we're looking at of course quantum computing. We are looking at space tech. There's a very heavy focus on alternate proteins, which means mock meats, and how do you really generate or rather create meats from, let's say, plant-based protein. And these are themes that will become big in the coming future, right? And some more pieces on the soft side, let's say, would be things like cybersecurity, how do you really leverage machine learning in data privacy today? Because that is another issue in terms of, you kind of read news every other day of how a large corporate has kind of lost your data to a bunch of hackers, right? And that's scary. And there is work going on at the very early stage, utilizing AI ML to a large degree, trying to prevent all of this from happening, right? A couple other themes would revolve around synthetic content creation, right? How do you really create a video without having a human in the loop? Are you able to, let's say, put down a script and then have AI completely manage the pipeline end to end and kind of produce a video output at the end of your speech, or rather your text input, right? So there is work going on that front, and that could have B2C use cases as well as B2B use cases, right? So to really go into a very, to take a magnifying lens to it, multiple different pieces on the software side can have both B2C and B2B use cases. So, across the spectrum, we're currently looking at anything that is a physical form of innovation or something on the AI ML innovation side, right? And when it comes to really figuring out how an investor tries to help out their portfolio, I'd like to take a different approach because, I feel like a lot is spoken about how an investor really helps out their portfolio company, but not a lot is kind of spoken about how an investor's LPs really are also able to help out a portfolio company, right? Because your LPs are basically folks who have invested in the investor. They've essentially given them capital to kind of fund these startups, right? So, some investors also try to see how their LP base can work to help their founders in their journey, right? So some LPs in investors could be ex-unicorn founders, or maybe sitting at top positions in strategic players, or maybe VPs in a tech giant. Some may be from a traditional business background as well, right? So at times, funds may also look at making this network of LPs work for their portfolio companies as well, right? And connect founders to, let's say, industry experts where necessary. And there has been plenty of overseas capital that has been coming in to India, right, from an LP perspective. And it's likely that it will continue over the next few years as well. So there is plenty of capital to go around for startups, and investors are looking for opportunities very actively. So, the number of winner take all markets out there is decreasing, which means that there are large competitors to what you're building. Even if there are large competitors to what you're building, if you're differentiated enough and have the traction, you will be able to raise funding from an investor, right? And the LPs who give money to a VC fund to make the investments are sometimes also looking to get involved in the growth of these companies and the portfolio companies or startups, right? So not only is there plenty of capital available, but there's also a strong network that an investor's LPs can bring in terms, in for a startup, in terms of growth, follow-on investment opportunities, advice, connections, and broadly just opening more doors for them, right? And of course, investors themselves also help out a portfolio company, and as you spend more time in a fund, you kind of start getting more and more involved, and you spend more of your time working with your portfolio. And I think some investors may choose to also get very operationally involved. So I know of funds that assign analysts to, let's say, a couple of months worth of projects specifically with the portfolio company, and have them get that operational experience while also helping out the portfolio company in that capacity. So and of course advice in terms of follow-on fundraising, in terms of strategy. Let's say a company is confused. If they want to expand their B2B SaaS solution, they've conquered the India market, let's say, and then now they're looking to expand into Southeast Asia. But hey, there may be an opportunity to go to the US instead, because there, you may be able to crack, accounts that match your customer profile within India. So, that's where a VC can bring in that layer of strategy as well. And of course, another core area where an investor would also help is, I think, in terms of hiring, because especially from a deep tech perspective, getting the right talent, getting that right CTO early on, or getting the right AI ML lead, that is, I know, a very big challenge for startups today. And that is where, at times, having a good partner with you would really help in the long run.
So, Akhilesh, I think that's amazing. And how, I think investors are playing the role of mentors or to guide them to the next journey. That's very well mentioned, that how they struggle for their first customer, their first lead, and everything as the first step which they need to take up. And I think investors like you are helping a lot. So there is a couple of questions in the chat box. One interesting question which every tech startup definitely pops in is how to safeguard their idea. I think that has been answered a couple of times, but I think once again, if that could be answered, that investors, how they how to ensure that your startup idea, which when pitched to investors, doesn't get copied by the investors. So Akhilesh, again for you.
So I'll take that up. So I think the simple answer over here is that, hey, if an investor was able to copy your idea, then either you shouldn't be building that, or the investor has something to really work on and then actually steal that from you, right? But to be honest, look, you need to. So again, another from a perspective of a deep tech investor, what I look at is what real moat you have in from a tech perspective, right? And if I'm really able to build that out that easily, then I probably will not end up investing in that company, right? Then I'll probably look at a business model innovation, in which case it will not fit my thesis any longer, right? So at least from a deep tech perspective, we haven't really come across. I haven't come across a company where I can say that, all right, if I put a tech team together, I'll be able to copy this idea very easily, right? So that's something that is my personal experience. But again, I do understand and I empathize with the founders who may have faced issues in the past. And I do not speak for all investors, but do check the credibility of the investor. Then, in that case, before you reach out, speak to someone in the ecosystem. Try to understand, how the investor functions before really going ahead and starting this conversation. And also, a lot of founders, I do know kind of are more comfortable with an NDA. So if you're able to convince an investor to sign an NDA before you go ahead and talk to them about your IP, then go ahead and do that. But I'm not too sure how many investors would readily actually go ahead and do that, right? So I think the best way forward would be to really, for yourself, identify some folks that can give you a good reference about a fund that you want to pitch to, and then base it on trust.
I think that's well said. Even I have the same view that it's all about execution. Nobody can execute better than you. If you succeed, you are the startup. So it's nothing that, and I think that that's very good in points which Akhilesh shared, that you must look into these aspects. Reference is very important to safeguard your idea. So there's one more question which is there in the chat box. I think I left that. So you, Akhilesh, that was again referring to your thing. I'll just repeat that because they were referring to the tech areas. So that was a cross question, that do you only invest in similar domains like edtech, agri-tech, and or something else? So I think you have answered already. So I don't think that need to be highlighted more. So Visa, I'll just quickly move to you now. What are the, like when you are hiring the initial tech team, like these startups are doing that, and how do you suggest them that how to create that good startup base while hiring these tech teams? And it becomes more complex once the team is like your whole startup has been overvalued or being valued, and all these questions come in. So what do you suggest tech startups to opt for as a strategy for the same, and how do you help such startups in these situations, hiring and expanding their teams, retaining, or what are your suggestions on this?
Again, I'll have to divide this into two pieces, right? Staying in Bangalore, you kind of understand so much is going on about hiring here. So again, there is this something, and Akhilesh beautifully kind of hinted at it before, and I had a smile on my face because this is a problem, right? So again, I'll divide it again, right? SaaS and frontier tech, right? In frontier tech, getting talent is very, very difficult. It's not easy to get talent. There is a talent crunch. And the problem is that, the way we are taught in school, sciences, right? And how you kind of translate it, right? In the in the, in a more practical world, in an application world. I think that is still missing somewhere when it comes to deep science. So the founders, if you see in the frontier tech piece, right, quantum, nobody can replicate because it is not easy. It takes a lot of time of research to kind of bring to that, right? And hence the talent to find someone who's going to help the entrepreneur, right, to get to the next iteration of the product or the piece, right, is equally hard. So the talent crunch is there, and hence you will find most of these, these frontier tech startups, right, you often plan to kind of, do a flip to kind of make sure that you have access to global talent, right, basically. So when it comes to frontier tech, the talent crunch is there, and hence, in order to, the evaluation process is more different, in order to help a startup kind of hire the right talent, right, per se. When it comes to SaaS, when it comes to the developers market, the software programmers or all, it's, I think the pricing, it's again a demand and a supply crunch that is going on, right? Basically, the supply is less, the demand is more, and hence the ask is also more, right? I mean, you see college graduates kind of asking a huge multiples, right, which is kind of unheard of and makes no sense, and maybe they don't even know how to make product. So those pieces are there. And the way you kind of go about it, and I think it is important when it comes to the SaaS piece. I think it is important to kind of look at the person's talent capacity rather than pedigree. It's what happens in the SaaS or in the software domain is that most of the hires, and Akhilesh jump in and Tushar too. I keep on pointing to Akhilesh because I think it's like we kind of, pretty much at the thing, and I have interacted with him so often. But Tushar too, right? Please, point out, right? The thing is that often the pedigree, we look for pedigree rather than for talent, right? So are we looking from an IIT or an BI bits or somewhere, and so that's when I kind of realized, and having looked at edtech before, right, I've kind of realized while talking to students as well that tier 2, tier 3 college students, they might not have had the opportunity to be able to make it to the tier 1, but but if they are trained well, right, the talent is there. There is talent there, right? So and then there are these many of these programs, right, and many full-time software developers, or who are kind of taking out the time also to kind of help these tier 2, tier 3, like forming these groups, right, to help them to kind of develop those required codes, right, basically. So I think to kind of overcome that unnecessary talent pricing, I think one needs to look beyond these tier 1 markets to find good talent, because at the end of the day, what really makes sense is finding the good talent rather than the stamp that you carry, right? Because at the end of the day, the work has to get done, right? And if someone it's not that you're underpaying them, it's not that you're going to underpay them, it's about industry standard and what is right. And if you're able to do that with a good talent, I think that is more important than trying to hire the pedigrees, right? And the other piece of it is also, I feel, is that when you're early stage, please understand who understands your vision to build that product. I think that is more important. So there are other ways of also compensating for the talent, right? There is these ESOPs pool that there are these different ways, right? Sometimes you might not be able to pay the package, but there are these ESOP pools that a founder should be looking at it in a good way, because that is important, right? So I think there are different ways of kind of figuring these packages out in order to hire the right talent, rather than going for a brand or a pedigree kind of a thing, right? Because that might not suit your requirement at that point of time. So I think there are different ways of kind of going about it, but most importantly, I think anybody who's sold out to your vision will join you. So make sure that even if you're not even cash, you are paying them for their sweat. There is a sweat equity that comes from ESOPs and other ways of kind of taking care of that. So make sure you are able to do that.
Thank you, Visa. I think that's very nicely answered. And I think I also have that view that go for the talent rather than going for a tag. just test them with being part of it, your team. So Tushar, over to you. You have been an entrepreneur. You have raised funds, then funded startups. So what are those few tips which you would like to share as an entrepreneur when you're going for a funding round? And what could be the other way around an investor might be thinking? So you have gone through those two cycles. So if you can just highlight and give some thoughts on that, your share your experiences or story around this.
Sure. So, before I jump into that question, I would like to extend, what Visa said about the talent
Yeah,
thing.
I was about to ask this also, but I thought that this will be too long for you. So you must have done the hiring as well. Yeah.
So, just would like to touch a few points on that. And I totally agree and relate to what she said. So I've also faced this challenge for my venture, but, I've read this somewhere, I don't know who quoted, but, usually employees, majority of them may not leave just for money. There must be something else for which they would have left. And, as you also said, they need to buy your vision. Early stage when you're hiring, try to have people with entrepreneurial mindset who would want to work in a similar way, in a similar space as you are. Even now when I hire, I would say that, boss, see, we are a startup, and we look for very, very committed people. बहुत काम करना पड़ेगा. And if they are coming for the interview, that means 50% they have already cleared, because there's a filter. You're telling them it is very challenging, you'll have to work very hard. This is what we are expecting. Be very clear. What usually I've seen in founders is they are in a convincing mode, pleasing mode. So what happens is that, in that case, the employee would look just for money. So there are multiple other things as well apart from money, which as an employee I would expect: a good work culture, a good leadership team. In case of startups, it is the founder, co-founder, and their vision about the company. How big you want to build your company? What do you see after 3 years for them in their career? Because obviously we would not be hiring very senior folks pretty early in our startup. So these would be lesser experienced people. Like they may not be very large experienced people. So they would also want to see how their career would grow with you. And if your company is growing, obviously their career is also growing. So they should be clearly be able to see this growth path. So it is not just going to be you interviewing them because you are an early stage startup. They would also be thinking about you because there might not be publicly available information like any other MNC which they can apply for. They can easily Google out the news and achievements and the plans of the company. You being a startup, there would be limited visibility on media and all that. So during the interview process, you also need to very clearly talk about it. And if you are seeing that they are relating to what you want, they are really willing to work that hard, I think then money would be secondary. That would be important. I'm not saying that it is not important, but then there are multiple other factors as well which you need to talk about. So this is what I wanted to highlight.
Yeah, I completely agree with Tushar actually at this point, because as just as Visa also said, hiring that tech talent or business talent, for that matter, early on is very difficult, especially at that mid to senior level stage, right? But when you are getting in, let's say, a younger crowd or freshers or someone with a little less experience, right? I completely agree with Tushar. In that case, you have to be, as he also mentioned, and in his words, be real about what your company is and what your expectations are. Right. So that's one aspect of it, right? That's one aspect when the candidate is outside of your doors. But once they step into your doors, it's also important that you create a good environment, that you create a non-toxic environment for people to work in. And the importance of that is not something that you'll feel in the next 2 weeks or 2 months or 2 years. You'll feel that over the course of 6-7 years, right? And if you start with a good culture, with a good environment, people will work hard for you. People will buy into your vision. If you show people that you care about their growth, both professionally and personally, people will, respect that. It's what I've seen over the course of my career. I've respected my, my colleagues for looking out for my growth. And I know that, and that's again created because of good culture and, a wonderful environment in the workplace. And this can also be done, in a work from home setting and not just an office setting.
So,
I think that's amazing.
Again, to add one more point, it's very interesting because I'm able to recollect a few examples. So, to add to what Akhilesh said, you need to connect with them personally as well. They see a leader in you. They should see a leader in you. If they are not seeing a leader in you as a founder, they would definitely leave. I mean, even if you match the next pay, whatever hike they are getting in the next company, they would leave. So, you connecting with them, your vision getting connected with them consistently. After 6 months, what is the review? What are the next plans? They should clearly see, month on month. We usually give updates to our investors. We miss out giving updates to our employees who usually do not have what is the visibility, what is the discussion going on between. I mean, you say that, okay, I'm going to fundraise. But then 3 months back also you said I'm going to fundraise. So what is the development in the next 3 months? Because my career is also connected with it, right? What is happening in your team members' life personally? Are they facing any challenges? Because what I have also experienced, and I have worked in MNCs myself. So what I have experienced is that when you under deliver as an employee, as a management, as a founder, you should not feel that it is only because of work and you keep on pressurizing and then ultimately the employee leaves. That was a good employee. They left because you felt that they're not delivering well. And you created pressure and you wanted them to perform, and then there were some misunderstanding, but actually there was some problem in their personal life or something, which if you would have taken it in a little different way, the performance would also have increased and the connect for the next 1 year would also have increased. So that is what we need to keep on doing throughout the engagement. So this is the point which I wanted to highlight. Coming to
basically as a founder, you're always selling. You're selling to clients, you're selling to investors, you're also selling to employees, right? But the takeaway is that be real while you're selling.
And the other part of it is, right, that employees leave employers. They don't leave the organization, they leave the people. Actually, it's all about people, right? And I think it's important. Often what happens is that, and when you say something that your culture is transparent, please, we often say something, we do something else. That's also there, right? It's easier to say things out, but it's difficult to kind of maintain that consistency, right? And an employer who has the whale's capacity, right? If he or she is not able to match up to that, the energy is, at the end of the day, everything is a marriage, right? It's just not about an employer and a founder getting married to each other. It's also about an employer and an employee also marrying, right? Because majority of your time is somewhere with work rather than with your own family, unfortunately or fortunately, whatever that is, right? Now, there are two ways to do it. A person who's really into work, their highs are more, they're looking for highs at their job, right? And one of the major highs at your work is the people around it, right? Around that. It's a very important piece. And something that I'm realizing more and more as I'm growing in my career. I'm kind of realizing, earlier when I just, got out of college like 3.5 years back or so, right? I was thinking differently. But now as I'm maturing more and more into my career, I've realized the importance of people, the kind of people you need to work with. And that is like, it's been a learning, that's been an eye-opener for me. It is the number one pointer for me, right? Money comes later because you will earn money. You are going to grow, right? We are here. All of us have a certain level of intelligence. We will grow no matter what. But if that people tick mark doesn't work, right? Everything else is secondary. At least for me, I've realized it is secondary. I will continue for a while. And after that, I'm off the board, right? I'm off the board. And for me, that is the most important thing. And second thing is that follow your heart. Because your gut, your heart is something that, there is a reason why there's something called the sixth sense also, right? It is a very important sense. We kind of we kind of give a lot of importance to the 5 senses that we have, but the sixth sense is equally important. And one of the times that I haven't done that, I still regret it, right? But you learn. I have learned. Like I said, I'm growing too, right? So please follow that. It's so important.
I think very rightly mentioned by everyone, and everyone will agree that more than 60% of the time we spend with our colleagues in office. So it's hardly what time we spend with at homes, and it's very important. It's like another home, or whatever you say, extended family, or we make friends. We are happy or sad, but we are in office. So how good you keep that environment on. So every day, everyone should feel excited, no matter how much the work is, to come to the office or meet the colleagues. So that excitement needs to go
Yeah,
on.
I mean, again, like not everybody is going to be your family, so don't expect that and go, please. Again, that's I just
Yes.
want to kind of make sure offices don't expect a mother or father at your place. Those are
Right.
very rare instances, right? I got lucky in my at the last place, right? In, you know, whatever, right? Basically, so not about that, but cordial growth, like Akhilesh said, right? Cordial growth, like Tushar has been saying, cordial growth, right? That is important. Are we able to work with each other in spite of our differences and being agreeable, right? That we are different people, we come from different experiences, but as long as we are not insecure of each other's opinion and have that space to, you know, to give out your opinion, because that's when you learn, right? Challenges are not to be taken as someone is insulting me or someone is not being whatever, right? So the growth happens when you challenge each other's viewpoint, challenge each other's opinion, and I don't know why I'm saying it, because I feel it so much. I mean, you know, I have been learning about it so much, right? I've been realizing about it so much that it is super important for an employee who is kind of looking to work very, very well to kind of make sure that you understand the culture. And it is also important for the founder to kind of lay out the culture very transparently, right? To say that this is what is our ethos. And if you think you fit in, please, we are all, you know, come on board, right? It's important to kind of have that sorted. We say culture eats everything, it's true, but most of us, it's easier to say than do it. But if we can implement it, I think it'll be great.
I think rightly mentioned, Lisa. I think Lisa, it's very, very important. It's all about people. Everything is all about people. So Tushar, I'll get back to my old question. So your experiences of raising the fund and then investing. So if you can just correlate some thoughts on that. And then I would suggest, like, we'll have some good stories if you would like to share some interesting experiences of your investment. So Akhilesh and Lisa, your short stories. We have another 30 or 20 minutes, but we must have those stories shared with our audience. Yeah.
Sure. So I'll draw a couple of examples, like with my own personal learning, as well as, you know, the startups with whom I've been interacting with all this while. So a few learnings here is, you know, raising funds is not going to be a 1 day or a 1 week task. It's a journey itself, right? It takes its own time. Now, what happens is that, you know, whenever some investor shows interest and, you know, by the time the deal gets closed and the money comes to your account, certain weeks or certain months it takes, depending on the stage in which you are in, depending on the investor whom you are going to reach out. Now, as founder, we, you know, usually we either become very excited very fast, or we become low very fast, right? It's very spontaneous, right? So we need to maintain our cool in this. What I'll give you a couple of examples in this. Now, if my investor meeting goes very well, okay, I met an investor as an entrepreneur, and my meeting goes very well. And next 1 or 2 days, I'm just reading, oh, 1 crore, 2 crore, 5 crore, and, you know, next 2-3 days, your work it gets affected. Okay, you are not able to you know, focus on the issues which are there at hand on that particular day. And maybe if there is a second meeting next week, you start, you know, you prepare for that meeting. Next week there's a third meeting, and at any point of time, usually if you're raising funds actively, you'd be speaking to multiple investors, you know, during a week, right? It's not going to be that you reach out to your first investor and you are going to raise. Very rare, right? You would be speaking to multiple investors. Now, what happens is the focus on your business, it gets diverted. In many of the founders I've seen, very good founder, very fast scaling, you know, initial 6 to 7 months you scale very fast. Now you're at a stage when you're raising funds, and you because fundraising, as I said, is a journey in itself. During those 2 to 3 or 4 months while you're raising your funds, very important growth metric is not taking that, you know, fast growth trajectory. Now, as an investor, they would focus on your last 2 to 3 months very specifically. I mean, good that you're growing, but what is last month? What is last to last month, right? And if that is not, in that pace, because month on month growth and, quarter on quarter growth, these are very important metrics on, I mean, whether it is a SaaS or user engagement or revenue, whatever the numbers are. So very, very essential to keep growing your business, because if you're not able to raise funds, still you have to sustain, and only that growth will help you sustain, number one. Even if you are able to successfully convince the investor and take it to the next level, till the time you get the money in your account, or till the time you sign the check, there are certain due diligence and certain legal steps which takes place. At any point of time, if the investor loses faith on, oh, the business is not growing since the last 2-3 months, there is something wrong. Let me wait for 1 or 2 more months. And then you have lost your money, you have lost focus and your track. So very essential to continue growing. For fundraising, you should not divert attention to your immediate issues, to your immediate, tech improvement or the marketing, whatever plans you had without funds, continue doing it. This fundraising is an add-on, so never divert your attention. Many of the founders, they actually lose track because of this particular piece, which is very, very essential. So this is one. Second, I won't take much time. I'll mention one more point, and then we can speak on the other topics. So the other thing is about evolving your pitches. So what happens is, usually every next investor whom you are going to reach out, you should be able to present an improved version. If you're not improving, if you're presenting the same deck, there have been startups 3 months back also, it was the same deck. After 3 months, it's the same deck. It should not happen, because as a startup, if you are growing, your deck would speak about the changes, about the growth which should be there. Plus, it is very, very difficult to, whatever you have done in 6 months, 1 year, 2 year, whatever research or things you have done in your startup, very difficult to explain it to someone in 2 minutes, 5 minutes, or 10 minutes, or 15 minutes call or deck, right? So you need to improvise on it every next meeting. Usually, what I have seen is that we actually have one deck and we present the same deck. We need to keep on improving it day by day. Right, this is very, very essential. These are the two very important things which I would I just wanted to mention on this forum.
Look, I absolutely agree with Tushar. A lot of the points that he mentioned, especially about how you've got to make sure that you keep iterating, right? That is something I wanted to bring up anyway. You keep iterating on how you're pitching, right? You kind of customize your pitch to, let's say, your client, if you're a SaaS company or a SaaS founder. Excuse me. Similarly, you've also got to keep customizing to your investor, really understand, who you're pitching to. There are two types of fundraising, right? One is when you're actively fundraising, in which case you really have to be mentally prepared to do maybe 2 or 3 investor pitches a day if you're really pushing hard on the pedal. And then there's passive fundraising, where you get connected via someone, and let's say an investor wants to talk to you, you have inbound interest. One tip over here to founders would be that treat your investor as though they're a client, right? Maintain a CRM. It can be as simple as just building a CRM on a spreadsheet. Keep a track of, what the summary of the conversation was, what the investor really told you in terms of feedback, and maybe 2 months later they come back to you saying that, hey, would love to catch up with you, let's say for an update. And then you know exactly what they've said. Don't lose track of what you've spoken with them earlier. Then you can really explain to them, hey, okay, how have you really changed? What have you done since the last time? You know exactly what they've asked you, and you kind of are prepared to answer better, right? And really drive interest, right in the first 2 or 3 minutes of that pitch call whenever it starts, right? So, my takeaway, one takeaway that I'd like to offer over here is that even if it's a very simple spreadsheet, create some form of a CRM for your investor, right? Just gather all sorts of data, as in what that investor has spoken to you about, what were their concerns, who you spoke to in that fund, what sectoral focus they have, if it's something that would fit within your excuse me, if your startup would really be something that would fit within their thesis or not. And then based on that, you kind of spend that much time on that investor or not.
Great, great. I think Tushar, one more question on the chat box is for you. How do Headstart like how's the Headstart doing the valuation, and what are the startups can look forward for this? I'll just read it exactly what this guy has written. How to decide on the valuation of the startup for raising pre-seed seed round of dollar 1 million, and what percentage of equity to be diluted if the startup is profitable and has experienced founder team.
See, a very important question again, which every startup would want to have an answer to, but
Very difficult answer to give.
yeah, but the other part is that it is the trickiest and most difficult question. See, because early stage valuation is very subjective. There's no formula. There's no logic in it. Every investor would have a different investment thesis and a different way of evaluating your valuation for your startup. So I may, even three of us for a same startup, I may have a different thought. Akhilesh would have a different valuation and dilution metrics, and Visa would have a different one. So every investor has their own thought process. Even founders, as founders, we have a different thought process, and this is like a a very typical situation how we go to a market, right? So whether you sell a land or you buy something or something, the buyer would always feel that it is costly, and the seller would feel that I'm getting less money for it. So it's a very typical thing like that. But yes, as founder, we should focus, I would suggest we should focus less on the valuation. We should focus more on the ask. Okay, how much do you need to reach to the next level? So what is your next target? Let us say my target in the next 1 year is to reach from 100 to 1000 customers. You would have your own math on how much month on month growth you would need. You would have a math on, okay, I'll generate this much revenue. Now you check out what is the expense which you are going to incur to achieve 1000 customer. Okay, I'll have to hire 5 marketing team member. I'll have to hire 2 in tech. I'll have to hire 2 in operations. How much salary you'll have to pay them? What is the gap? Okay, my gap is like 5 CR or 1 million or whatever. Now for this, you are going to do a fundraise. How much maximum equity I can dilute for this? Okay, I can dilute 8%, I can dilute 10%. So you tell your ask, you tell your limits. Valuation would be subjective, and you can arrive to valuation by these two numbers. So if you have your ask handy, if you know the maximum range or the minimum range which you are going to dilute, valuation is maybe you can keep it flexible or negotiable. Some bit here and there you can arrive at a figure. So all these three things, your valuation, your ask, and equity dilution, these three are interrelated. If you fix two, the third you can calculate. I mean, Akhilesh and Visa, if you can add on to whatever I said.
Yeah, I think I agree to the ask and the milestones, right? Often I kind of come across a startup who's asking so much of money, so and so, but the milestones are not clear, right? So let's go back to that CRM sheet that Akhilesh was talking about, right? Have those milestones, right? If it's a $1 million that you need, have that that CRM, right? And what Tushar is saying, right? That incremental, right? What are the pieces? So have that. I mean, when you're doing your market study as well, based on that, definitely the ask is, right? I'm sure it's not like out of thin air that you've kind of conjured that number to kind of put it on the deck, right? So also kind of understand and kind of, if you can further break it down as to where the money is going to go for each, that also kind of gives investors a conviction to say that this guy actually has thought through the problem, right, before asking that money, right? That is extremely important. Valuation is a very subjective, it's a very subjective piece. It's one cannot really comment on it because rightly Tushar said, the buyer always feels it's super costly and the seller feels it's underrated, right? Undervalued, right? He's getting less. So I'll not get to that, but have milestones based ask, because that's what creates a lot of confidence in the investor as well, to say that the founder has done their homework to kind of ask what they want to, right? And that also lets the investor know, right, what value add that they can provide in that journey, because that alignment has to be there, right? If you are kind of looking for something else, then I as an investor might not be the right partner for you. And money is commoditized today, right? You're trying to ask for more, something else, right? And when it's a commodity, at the end of the day, you might want to do your homework, right? Which kind of makes to make sure that the marriage is the right marriage that you're getting into.
I think well said, Visa. So one more question in the chat box for you, Tushar, again. So do Headstart help in co-founder alignment also? Finding the co-founder. But that's one of the questions.
In fact, very soon you would hear that we do it. We have been doing it in the past, and very soon we are going to launch something for because we at Headstart, we strongly believe that Headstart should be able to support early stage entrepreneurs and whatever challenges they are facing. We have multiple initiatives aligned to it. So there's also something which we are working on. I mean, follow Headstart social media handles. Very soon you would hear something on this.
So there was one of the question for AIC-SNU on the kind of starters we are picking. So there were some specific areas on SDGs and all that. So any startup which is tech-based, technology solutions coming up will be the one we'll definitely evaluate and come up. We are very focused on the tech. So we are currently tech agnostic, irrespective of the sectors you are into. That will come into later, like what kind of technology you are. E-commerce we are not supporting, so there are many incubators who are doing it. So we gladly say that we are not built for that. Our campus is very focused on hardware and primarily more electronic based, and e-vehicle and all these are part of the portfolio, like curriculum what the SNU is offering to students as well. So these kind of starters will be happy with us. So a frank answer to all these questions is we look for starters who will be happy with us. Exciting, happy work here. And we do not want to bring on starters who do not align with the kind of facilities, offerings, or the focus areas we are into. So I hope that's answered. I don't know if that fellow is here on the chat, the audience or not. So we just have 5 more minutes. In fact, yeah. So before ending and summing up everything, if any one of you would like to share some interesting story, which was a learning experience while investing, and you would like to share with the audience, maybe the name of the startup may not be highlighted, but yeah, that story brought a lot of points for the investment team, that this could also be one of the changes in the policy, or this could be one of the challenge. So if you would like to share that story, one quick story, any one of you.
Tushar, Visa, I'm going to leave this up to the two of you.
Tushar, I'm going to leave it up to you.
So, a couple of things. So one thing may not be a story, but again, a few insights which we come across usually. Whenever we are interacting with investors or anyone, because we as founders are so passionate about our idea, about our plans, that usually we are reluctant to take feedback or not open to take feedback. And investors meet people like us, like I'm assuming myself as an entrepreneur, I'm wearing that hat. So when I'm as an entrepreneur, I'm interacting with investors, please note that they are interacting with hundreds of people like you regularly. They know what is happening. We are there building our own startup in our own garage, but they are going out. They meet people like you on a daily basis. Once you have pitched, rest of the time is very precious. You don't know whether they are going to give you money or not, but what they are going to give you is the next 25 minutes. If it is a 30 minutes call, 5 minutes, 10 minutes you have pitched, 20 minutes, extract the most out of that person who is having more knowledge in, at least in raising funds, because you are going to raise maybe for the first time. They have been funding startups like you. So please be open to understand what they are saying about the model, what kind of feedback they are saying, and what is it that is missing in our tech. Okay, we become very defensive. Okay, what happens is that if they say your go-to-market strategy is like you should do, no, I am doing this only in my go-to-market, this is the best go-to-market. Boss, listen, you've already said your time is over. Let them speak. understand, because either you are not able to make them understand or it is missing. Both case, you need to understand and make changes. Usually, I've seen that we are reluctant as an entrepreneur on taking someone's feedback about, like, it is like your baby, right? So I'm a father as well. So what if someone says your son, your daughter is not doing good, so you become very defensive about it. So don't be defensive. Take critical feedback, be open to feedback. Don't argue, or don't try to make them understand, because they have already made their mind. Now you won't be able to convince. Okay, so in the 5-10 minutes, initial 2, 3, 4, 5 slides, they would have sensed it, they would have related it to some other business, and they would have drawn some conclusion. Now very difficult to change that perception or mindset. So better is to take whatever they're going to give in the rest minutes. Second, try to approach via some reference. Blindly sending mail or blindly reaching out, you may not get answer, and maybe you may get demotivated on, I mailed 100 investors, no one is responding, I don't know what kind of people they are and all that, right? No need. Try to reach maybe via the incubator in which you are incubated with. They would have their own connects via Headstart, or via whatever network you are a part of. Maybe you have some mentors, you have some domain experts who you are guiding, who are guiding you. So you can try to reach out from referral network. If you are on the right path, definitely. Market in India has opened a lot in the last, and in the next few years it is going to open even more. So there's ample opportunity, ample funds available. Yeah, that's it.
Yeah, I think both Visa and I threw Tushar under the bus, and then he handled it like a champ. So thank you for taking that off us, Tushar.
Yeah, absolutely.
I think that was amazing, and this is something very interesting. So every time may not be the investment, but many a times it's a lot of learning which we have it. So I think we should focus on the learning part also while portraying or presenting to someone who's above you, and take away that's it, very important. So there are 2 questions from Abhishek and Akash who are curious to know. I think this is the last one we can take up. That if there is a startup who is in the R&D phase and prototyping stage, how to convince the investors? Anyone would like to take this up? Okay.
I'll let Akhilesh take it.
Yeah.
Sorry, actually the connection dropped a bit. Could you please come again if you don't mind?
Yeah. So there are 2 questions by like similar ones, that if there is a startup on R&D stage and prototyping stage, basically in the tech domain itself. So how to convince investors to invest in that time?
See, so that's actually the challenge here, right? Because, from a perspective of an investor, and that's a chicken and egg problem, right? Your investor always wants to see some sort of traction, or they want to see some working model before they really invest in you. And then, you really need to raise the funds to go ahead and build this MVP or your prototype, right? But I think, the way there are a couple of opportunities to kind of go ahead and at least raise some money or get some grants, let's say apply to a bunch of different institutions, get these grants and really hustle your way through that, right? So even when you apply to institutions for grants, try to create a CRM out of that, because even there's an application for the process for that as well, right? So I think that's the most important thing, right? Of course, let's say if you're a B2C brand, right, there are different ways of getting funded to begin with, right? It's not just equity that that could work for you. Yeah, exactly. As what Mukesh also mentioned on chat, government grants I think would be my go-to, because I've seen a lot of startups that have now come into our pipeline who were struggling to kind of build out this prototype at first, and they were a little too early for us, right? So they've kind of raised money as grants without diluting anything. In some cases, you do end up diluting, but at a very, very small, ownership for the person who's, or for the institution that's giving you the grant. So that becomes a bit advantageous for you, right? And it also helps the government achieve their goals of funding specific startups or other specific sectors in a particular year. So I think that there is money for that allocated by the government, for grants. So there should be a possibility of raising. That would be my go-to channel, before approaching VCs, if you're having a hard time convincing an institutional investor to give you capital for your prototype.
I think that's very nicely.
Yeah. So to add to what Akhilesh said, yes, grants are now much easier to apply for, especially in impact sectors. To add on to that, there are a lot of corporates also who have started exploring and giving grants, as well as initial funds for pilots, right? So even many government departments they have reduced the norms for their tender and all, and they if you are a registered this thing startup, they would give you some funds as pilot, like to run pilots, right? So for example, startups in drone space, or a lot of other deep tech space as well, you can acquire your first customer and then build once you have some assurance from there, and in terms of helping you with the pilot, giving you the market access. So also try to explore corporate partnership. It may not always be investors. You can have different other methods as well to get the money.
I think, yeah, so these are very good points. And the other way is that you could look forward for some incubation connect, because there are a lot of grants which the incubation center do give away. And of course, the government of India with various departments, like 50 lakhs up to grants, I have seen research ideas, R&D projects getting. So you need to be a little agile and look up to these information aptly and apply. Connect to well connected to people who can give you the right information is also very important, because you are not aware the kind of announcements being made by various departments. So keep yourself abreast, make a CRM here also, when and where what grants are coming out. So you need to have that deadlines and everything in place so that you don't miss that. That's very, very important. So everything comes like you have been in a college, you have to apply and be there on the top list, perform better, get some marks. And these are also, again, the marks of your investors and clients, everyone. So it's all about how you are able to track and be agile to everything. So it was a wonderful session, Akhilesh, Visa, Tushar. I think people are excited. We can see the chats and the kind of engagement people have shown, and amazing information you have shared, something which away from the normal investment discussion, something very focused. We are very happy to have you. We are also coming up in a similar space. I think all this discussion will lead to a very good relationship further whenever we have the startups here in the similar space. And we look forward for such engaging sessions again, and have you on campus sometimes when these scenarios are normal. So see you again. And by the way, all the audience, you can post your questions. We are well connected on social media. We do have we have already shared a Google form earlier to you. You can write back to us, even reply to the email where you received this invite. So we'll be there to address your queries. Thank you so much.
Thank you, Sheeba and team. Thanks a lot for inviting us.
Yeah, Mukesh, if you are there, if you would like to add a few lines.
Yeah, thank you, Sheeba. I think you definitely have moderated wonderfully, as well as thank you everyone, Akhilesh, Visa, and Tushar, for giving this wonderful insight, both on multiple domain, I can say. Definitely, be it on the investment, be it on the SaaS prospect, be it on the great resignation of 2021, which we all hearing, more focused where we are keen to work with the people. Where we are more focused on working on the technology, on the SaaS, and as well as to impact the society. Definitely, this was really wonderful session. I really have enjoyed it all for the last 1.5 year, half hour. I have been listening to you guys, and I definitely hope that this will help more startups who will be hearing it out, because we'll be posting this on our YouTube channel as well, and we'll be again in touch with you. Thank you once again for accepting our request to join this session.
Thank you so much,
Thank you
Mukesh
so
and team.
much. Thank you so much for having us. Thank you.